Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 11th of February, 2023. And this is the weekly technical analysis for spot gold and dollar yen for the third week of February. And let's begin with spot gold, where after a significant retracement the last couple of days of the previous week, it then consolidated for most of last week, attempted to climb back up towards the 21-Feb retracement, but was rejected on Thursday, and then dipped a bit lower and finding support in this narrow range here. But it's not able to climb back up higher. Almost hit the 1850 level. And it was close to getting there where the daily 55 EMA is. Went down to a low of 1852.73. So it still managed to hold above that, but the next target, if that breaks, if the 1850 breaks, then it's will likely target the 38-Feb retracement, and then below that will be the key 50-Feb retracement area, and as well as a psychological barrier at 1800, where the daily 200 EMA is rising up to as well. So there is a another layer of support which could help, but for now it's looking bearish in the short term. And if we look on the weekly time frame, it's hanging on the with a spinning top close for the week, and it could be just a pause and a pullback to retest, but was rejected lower. So let's see if next week the US CPI figure will cause and create some volatility, and along with other US news for the week, that could trigger either weakness or perhaps a bounce back up. So we shall see which way, but most likely it will need to break out from this consolidation area. All right. Now, may add on another layer here of support. And another layer of critical support here at 1850 as at 1800. But now the resistance that's holding is at the 21-Feb. And was not able to retest the 1900. So this is intermediate resistance at the 1886 area. Okay, so let's compare this with the US dollar index to see how that performed for last week. And here's the US dollar index, the DXY, and right on Monday itself, it gapped up, just as the other pairs gapped down. gap up and above the 103 and almost hitting the 62 fib, which it finally hit on the Tuesday. 62 fib retracement level, just under the daily 55 EMA, and then consolidated for the week in a very tight range, finding support from the 38 fib retracement and settling around above the 50 fib. So this intermediate resistance, let's move this up to the key resistance now. Support is still right here at the swing low. And well above that, that's the key resistance round figure level of 105. But for now, it needs to break through the daily 55 EMA if it's going to gain any ground. And then after that, it's got to contend with the daily 200 EMA around the 786 fib retracement area. All right, and this Tuesday, there's the UsdJpy figure. We will see if that's going to be a catalyst for further boost in the US dollar, or whether it's just going to be a muted figure. The expectation is slightly lower than the previous month, about 6.2% compared to 6.5% the previous month. So they're hoping that its inflation is continuing to decline. Let's take a quick look on the weekly time frame, and it did gap up and then rose to hit the 62 fib retracement as well as the weekly 55 EMA, and that's blocking the progress for now. But in the short term, it does look like it may continue to push through higher. And previously, this is also a swing high resistance area. We take a look on the monthly. Yeah, that's where this double top was before, and that's around 103.70 area. Okay, so it's also consolidating as with all the other pairs, except that it did gap up at the start of the week and then consolidated. So it could be just a pause, and we'll see where it's going to break out from. And this Tuesday's figure will be critical, along with PPI figure on Thursday as well. All right, so let's move back to the other major pairs. Let's move on to the US dollar against Japanese yen, where there was a significant gap up, but right into the resistance, interim resistance at the 50 fib retracement, and then pull back down to close the gap to retest it on the Tuesday and consolidate it for most of the week. It did test the 130 support round figure before climbing back up into the 38 fib retracement area. So 130 and the 21 fib would be the interim support here. And major resistance is still going to be at the 62 fib, where the daily 200 EMA is drifting lower down, but 135 seems to be the critical one as the major resistance up here. But we'll see if it's even able to break out higher to test that next week or perhaps a week after. But for now, it's finding support and able to creep up higher slowly. And there'll be a key news for next week, the CPI figure, and as well as a couple more US news that could trigger some moves. Okay. Let's take a look at the weekly time frame, and there you'll see another bounce from the support, a higher support, higher low, and it's creeping up higher into the 50 fib, although it goes back down to the 38 fib retracement. So it is finding support and able to keep grinding its way back up. Okay, so key week next week with the US news, and to see whether all these pairs are able to break out from their consolidation, and whether the US dollar is going to attempt to recover somewhat. May not be as bullish as last year, but it's trying to recover after the recent fall from the end of October. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.